Assalamualaikum. Today I will present the subtopic for internal control, test control. What is test control? Test control is evidence is needed to support the conclusion that specific policies and procedures that are likely to prevent or detect misstatement are effective. The evidence should demonstrate both the effectiveness, design of the policy and procedures, and the operating effectiveness, their consistent and proper applications. The evidence necessary to support a specific level of control risk is a matter of audit judgment. Purpose of test of control is to reduce substantive audit procedures. By relying on the client's internal control, this is when believe the client's internal control work effectively in preventing or detecting the risk of material misstatements at the essential level. Obtain additional audit evidence. When cannot obtain the sufficient appropriate audit evidence, if we perform only the substantive procedure alone, need to perform the test of control to obtain additional audit evidence at the essential level. They have three scope of test of control. Number one is nature. Nature is type of test of control or substantive testing. It also refers to type of evidence or gathering procedures. For example, inspections, observations. Number two is timing. Timing is refer ability to meet deadline and scheduling of staff. Test control sometimes scheduled before year end, and sometimes testing extended roll forward until year end. Number three is extent. The more auditor rely on control, the greater the extent of test of control. Test of control related to document. Extent determined by reference to sampling theory. Usually test by re-performing by a small number. Four type of test of control. Number one is inspections. Inspection is an examination of supporting document related to control procedures. For example, inspect the bank reconciliation report to make sure it exists and the procedures are as described. Prepare and reviewer are different persons. Number two, inquiry. Process of asking for an explanation from the client relating the control process or transactions. For example, we may ask the client personal or an explanation about inventory counting procedure at year end. Number three, observation is a process of looking at the procedures that are being performed by the client. For example, we perform this type of test of control by observing the inventory counting procedures that are being performed by the client at year end. This is to make sure the internal control of inventory exists and the procedures are as described. Number four, re-performing is a process of auditors re-performing the control procedures that were performed by the client and most reliable type of test of control and provide us better assurance comparing to other types. For example, as auditors, we may re-perform the procedure of a bank reconciliation that was performed by the client's accountant. Substantive test. What is substantive test? It's an audit procedure that examines the financial statement and supporting documentation to see if there are content error. And it's also essential within the transaction classes or account balances. These tests are needed as evidence to support the assertion that the financial record of an entity are complete, valid, and accurate. Assertion substantive tests by transactions. Number one is occurrence, whether transaction that generate financial report account actually occur. Number two, completeness. The auditor identify evidence indicating item that should be included. Number three is accuracy, relate to the determining the appropriate recording of the amount value and other information of transactions. Number four, cut off. It involves checking that transactions are recorded in the correct period. Number 5 is classification. It's considered the appropriate classification of the item in the financial report. Assertion substantive tests by accounting balance. Number 1 is existence. The auditor select from items contained in the accounting record and obtain evidence that support them. Number 2, right and obligations. The auditor must ascertain the assets and liability are owned or controlled by the client. Number 3, completeness. The auditor identify evidence indicating items that should be included in the account. Number 4, valuation and allocation. The auditor consider the appropriateness of the basis of valuation of the asset or liability. Test of control versus substantive tests. What the difference between both tests? For test of control, it will test control activities. Meanwhile, for the substantive test, it will test the accounting record and underlying supporting documentations. If you can see, test control, it will test system audit, financial audit, test of internal control, and the risk is residual risk. For substantive tests, it will test financial audit, test of amount, and the risk is detection risk. For example, financial controller prepare the bank reconciliation each month. This is reviewed by the CFO. The review is evidenced by the CFO signature on the reconciliation and the date. For tax control, it will examining the bank records for the signature of the CFO, regardless of whether the bank record has been correctly prepared. However, in substantive tests, gathering the original bank statement and reperforming the bank reconciliation and confirming it match what the financial controller prepared. Internal Control System (ICS) is referred to all the policies and procedures, financial or otherwise, adopted by the managers of an entity to help ensure, as far as practical, the orderly and efficient conduct of its business. For example, management philosophy and operating style, and all policies and procedures adopted by management to assist in achieving the entity's objective. There are three parties have definite role to make internal control system effective. Number one, management. Establishment and maintenance of an effective internal control structure mainly depend on the management. Through leadership and example of meeting, the management demonstrate ethical behavior and integrity of character within the business. Number two, board of directors. The board of directors, possessing a sound working knowledge, give directive to the management so that dishonest manager cannot ignore some control procedures. The board of directors stop this sort of unfair activity. Sometimes, the efficient board of directors, having access to the internal audit system, can discover such frauds and forgery. Number three, auditors. The auditors evaluate the effectiveness in the internal control structure of a business organization and determine whether the business policies and activities are followed properly. The communication network help an effective internal control structure in execution, and all officers and employees are part of this communication network. Objective Internal Control System (ICS). The first one, to ensure adherence to management policies, meaning that all the transactions are carried out according with management's general or specific authorizations. As you know, management will have many policies, such as procurement, asset management, depreciation, stock valuation, and etc. Such adopted policy will be relevant to the auditor, as he will have to evaluate whether or not management is adhering to the set policies, their policies adequacy. The second one, to safeguard the company assets from abuse and misuse. Access to asset is limited in accordance with authorizations. The auditor is very much concerned with the asset safety, since in forming his opinion he has to satisfy himself that actually the asset do exist. To prevent and detect of fraud and error. This is the key responsibility of management. Therefore, a well-designed and adhere to ICS will assist management to meet his requirement. And last, to secure as far as possible the completeness and accuracy of accounting records. Transactions are promptly and accurately recorded so as to allow the preparation of financial reports. This is of a specific interest to the auditor because records form the basis for the financial statement upon which auditor is reporting. A good ICS will result the financial statement, which show a true and fair view. Three elements of the internal control system are: number one, environment control. The attitude, alertness, and work zeal of directors, managers, and shareholders are reflected through environmental control. Number two, accounting system. Accounting system means some procedures and recording with which identification of business transaction, classification, summarization, statement preparation, and analysis for timely presentation of correct information are performed. Number three, control procedures. The additional policies and procedures adopted by the business authority for ensuring the achievement of the specific goal of the business organization are the controlling procedures. Controlling procedures are such as proper delegation of power, segregation of responsibility, preparation and use of documents, adoption of adequacy security measure to protect the properties, and independence control over the executions of activities. 5 components of internal control system. Number 1, controlling the environment. The control environment is the basis of other element of all other components of the internal control system. Moral value, managerial skill, the honesty of employees, and managerial direction are included in the controlling environment. Number 2, risk assessment. After setting up the objective of business, external and internal risks are to be assessed. The management determines risk controlling means after examining the risks related to every objective. Number 3, control activities. The management established a controlling activity system to prevent risk associated with every objective. These controlling activities include all those measures that are to be followed by the employees. Number 4, information and communication. Relevant information for taking decisions are to be collected and reported in proper time. The event that yield data may originate from internal or external sources. Communication is very important for achieving management goals. The employees are to realize what is expected of them and how their responsibilities are related to the activities for others. Communication of owner with outside parties like supplier is also very important. Number 5, monitoring. When the internal control system is in practice, the organization monitor its effectiveness so that necessary changes can be brought if any serious problem arises. Design and operation of internal control system. If you can see here, each category they have a different design technique required and operate different of internal control system. For example, they have sales, purchase, wages and salary, acquisition of fixed asset, cash receipt or check, cash payment, followed by policy and procedures of internal control system. This is an example or scenario for design and operation of internal control system. Sales cycle involve all those transactions and events that are indicated when an entity makes a sale, commonly by a high volume of routine transactions. Audit problem commonly related to clerical processing rather than complex auditing problems. If you can see, control objective for sales cycle are recorded. Uh, Bona fide transaction for merchandise actually shipped to customer. Common control policy and procedures, it will look policy of credit and terms, evidence of quantity shipped to reconcile to quantity invoice. Days of control, it will select sample of sales transaction from sale activity report, check for the authorization and trace to shipping document file, inspect reconcile of shipment to invoice. For cash receipt system, control objective, cash received are recorded for collection of receivable and resulting from sale to customer of the entity. Common control, it will look cash receipt match to specific sale invoice in posting to account receivable master file. Task of control, it will select a sample of entry in cash receipt journal and review evidence that match to specific sale invoice. Type of misstatement in sales cycle. Generally result of clerical mistake, employee fraud, misapplied accounting principle, especially around some revenue recognition issue, management fraud. For purchases, control objective is recorded purchases, transactions that relate to goods or services authorized or received. Common control, approval of purchase order. Goods received are counted, inspected, and compared to purchase order before acceptance. Comparison of purchase order, receiving report and supplier's invoice, and recomputation of supplier's invoice before recording the liability. Test of control. It will examine the evidence of approved purchase and service order. It will select order entries in purchase journal, trace back to voucher and inspect for existence of supporting document including receiving report, ensuring agreement of detail and indication of approval. For cash disbursement, control objective, it will record cash disbursement for goods or services authorized and received. Common control, check printed or prepared only when receipt of goods or services and approval are documented. Check signed only after viewing supporting documentation and prior approval. Supporting documentation cancel and reference to check number. Test of control. You will select a sample of cash disbursement transaction from cash payment journal and inspect supporting documentation for indication of checking, review, and approval. Observe and inquire about check preparation and signing and protection of unused check. For the sample of cash disbursement transaction, inspect supporting document for cancellation, check number, and endorsement. Potential misstatement in expenditure cycle. As expenditure cycle involve disbursement of cash, there is a greater risk of fraud, including classic disbursement fraud, kickback, illegal act, and unauthorized executive fraud and cheating. Selling and administrative expenses. Processing and related controversies and procedures for selling and administrative expenses are similar to those for purchases of inventory. Auditor will normally obtain comfort from cash disbursement testing for inventory purchases and perform minimal testing in this area. Analytical procedure example comparing balance with prior periods widely used as a key type of testing. Payroll function is usually audited in either of two ways, or best combination on focusing analytical procedures. There are disaggregated and strong relationship in this area. For example, comparing fortnightly payrolls. An emphasis is placed on tests of transaction over the payroll area, with a key control being appropriate segregation of duties in the hiring function, approval of time work, payroll preparation and payroll distributions. If tests of if tests of control are necessary, the following audit procedure may be undertaken. Authorization by supervisor of time work. Check signed time card or sheet. Check use of approved pay rate personnel department. Check for reasonable compare with what. This is the integrated test facility for a payroll system. If you can see, the computer application system, it will consist of production input transaction file, ATF transaction file, data file, production report containing ITF, this is for auditor use, report without ITF data, this is for management use. For interest, rent, lease, and insurance payment, auditor usually take a more substantive approach, which include checking term and condition of contracts. Auditor interested in the key control of authorization of the contract. Accounting treatment of leases is complex. An auditor might check, control the ensure leases are properly accounted for. Testing control in client computer programs is a separate technique have to be developed for testing program control. These are test data, integrated test facility, control processing, reprocessing or parallel processing, review, program code, and result of job processing. This is processing of test data. It consists of auditor simulated transaction, client computer program, actual process result in visible form, predetermined processing result, copy of client master file, and also the client information system. If you can see the arrow meaning that it's a electronic processing and the dash for the manual processing. Processing client data consists of control processing. Auditor establish control over processing of client data. Control reprocessing means that auditor reprocess client data. Parallel processing is a simultaneous processing of client's data through client and auditor programs.